Welcome to Markets Now. I'm Michelle, work with Randy Martinson Ag. Well, livestock futures are mixed with cattle higher, hogs lower. We're also mixed over in the grain complex. Corn is trying to hold on to some early gains here. Wheat is turned mixed with soybeans actually back lower. And I want to start off with wheat, Randy, because we got the nice push yesterday on China business. We got more SRW wheat business this morning, but the market's fallen back here now off of highs. So we've got most of it worked into prices, you think?
I think so. And we're starting to hear a little bit more negative news come into the wheat market too. You've got yesterday afternoon, Kansas's wheat conditions came out. Of course, we're not doing weekly crop condition ratings anymore. We're just doing, individual states are doing some. Kansas's crop improved by 8% to 40% good to excellent. That's a little bit negative. Minneapolis is getting hit by yesterday's Stats Canada's numbers, which came in a little bit above the average estimate, which a little negative, nothing fantastic. But, we're also bumping up against some resistance in Chicago. We were up at 3-month highs in that 630, 631 area. So I think we've got a bunch of things coming together that, if we can get a little bit more of a push and get above these levels, we can see this market continue. But it's also turnaround Tuesday, and I think that's causing a little bit of a pullback.
Gotcha. But what would it take for us to get above these resistance areas and get the funds to blow out of this record short they're in all three exchanges? Do we have to have more China wheat business, and will we get it?
Yeah, we definitely need to see more China business or more business going someplace. I mean, hopefully just the fact that China's buying will scare some other countries in to come in and start purchasing their wheat needs from the U.S. But we definitely need to get the demand picture to improve, which it has with China. Now, the rumors was earlier in the year that China was in the need of buying about 25 million metric ton of wheat this year. And so far, they've just started coming into the U.S. buying. I know they bought from Russia, and not sure how much, but knowing that they're into the U.S. is pretty good news.
Yeah. And of course, we had the rally last week in the wheat complex. And so obviously the market kind of knew about it already, or at least we were trading it already, right?
Exactly. I mean, yeah, we bounced off contract lows last week, and it was sure that there was a little bit of rumors. We've been hearing about China, going around looking at mills, looking at showing interest in wheat. We just hadn't had the confirmation, but I'm sure that broke last week. We're just hearing about it now.
So corn has been getting help from the wheat market. Can corn keep going up here, because we have bounced off of contract lows there as well?
It can go up a little bit more. I mean, it's going to be limited. We still got a 2 billion bushel ending stocks estimate. Corn isn't going to be the runaway market here this winter. It's going to be able to have some strength, but it's not going to have a lot. So, yeah, I think it can go up a little bit more, but whatever it does, it's going to be limited. And, any big rally then will be met with, I think, some selling by the farmers.
What's happening to basis levels, though? Because I'm hearing there's some good basis pushes in some areas because farmers have kind of locked the door on the bins.
Wherever there's not piles, the basis levels have started to improve, and you go up and down the Western Corn Belt where there was a little bit of, touchy production numbers coming into play. I think that's where you've seen some basis improvement, into, the Eastern Corn Belt as well. Up here, we've got a few more piles, so our basis levels being a little bit slower to react. But I think once those piles get done, I agree with what you said. I think the basis levels will start to improve because once the supply's gone, it's going to take a little more to get that crop out of the bin.
Yeah. And at these prices, I think end user demand has actually been pretty darn good. Okay. Soybean market is setting back here today after some early strength. So is that, I guess, just some profit taking here, or is the market looking forward to the Brazilian forecast because it's supposed to change here mid-December? And, we've had some pullbacks in terms of production, but are those already worked into this market?
I think they've worked in the pullbacks. I mean, we'll see, what everybody's going to say. Thursday we get CONAB's numbers, and then Friday we get USDA's numbers. So we'll see what, the numbers are going to be at that time frame. And I think the market's going to wait for those before it does too much. But I do think today's pullback and the pressure that we're seeing is because, short term, there's rain pulled out of the forecast. It's going to be dry, but by the middle of December, they're talking about a complete change in the weather pattern for Brazil, where the north is supposed to get cooler and wetter. And that, I think, is what the trade is really watching to see if that develops.
But Randy, will it be in time to help the crop down there?
That's a really good question. I mean, look at how our crop turned up here. We got the rains late enough where we were able to save the crop and actually come in with a pretty decent production in the U.S. So that's what everybody's expecting to see as far as South America is concerned. Is that even though there is going to be some damage, there's going to be some areas that are going to have lower production. Mato Grosso, Rio Grande do Sul, I think are going to be a little bit lower production. But in the big picture, it's going to help build back some of what they've lost.
And as you mentioned, we do have the WASDE report on Friday. Do we have some early trade guesses that we can talk a little bit about?
We do have a few. They are looking, of course, with Brazil's production is expected to be dropped a little bit. I think for the soybean market right now, they're looking at soybeans cutting by 3 million metric ton. Argentina is not looking at any cuts. As far as corn, our stocks for corn, the average trade estimates coming in at 2.1. Pretty close to where USDA was. For soybeans, it's 250 or 243. Again, not much off of last month. And wheat looks like it's coming in at 684, which is equal to. So this report doesn't look like it's going to bring a lot of new news to the marketplace.
Well, in December, we generally don't see many changes. It's the January final report where we usually get a lot of those, isn't it?
Exactly. And we'll also see the first look at winter wheat seeding. So, I mean, that's going to be the January numbers are going to be a lot more important.
Gotcha. Cattle market. Well, we're trying to bounce here today after dropping $30 in live cattle from the high to yesterday's low. But will today's uptick hold? I guess is the big question.
That is the $1 million question. And I think it will. I mean, it seems like every time we go down to the lows, then we get a couple of up days and then we just, run into more selling. So I think right now the market's in a little bit of a recovery mode. And we're likely going to continue to see this as we go through December, probably even the first part of January, until we get close to seeing the cattle inventory report, which should dispel any rumors of cattle retention. So I think it's going to be a while that we continue to see this happen. But for right now, I'd look for a little bit of a couple days bounce. Then I would look for some more selling to come in.
Well, we are very oversold here in this market, but obviously we do have the funds, which have really gotten out of most of their long position, at least right now, huh?
They have. The funds have gotten rid of their longs. Most of them are short or, flat to getting to be short. So I think with yesterday's performance, that really was what's happened. So it's going to be interesting moving forward. This cattle market certainly has bled a lot. I mean, right now we've virtually removed the last 6 months of gains.
Yeah, $60 pullback in feeders off of their highs, incidentally. Okay, a few other markets I want to touch on. Gold, we made new highs yesterday and then, a wicked reversal. What was that about?
Well, I think we ran into some profit taking and, a little bit, I don't think it was too much on the economy. I just think the market went to that 2,100 and there was a lot of sells at that point, and we started to see the market tumble a little bit, and we're seeing some spillover here into it today as well. So I think it's more profit taking than it is anything else.
Well, we're getting towards the end of the year, so that makes sense. What about crude oil? We have been down, I think, what did you say, the last 4 weeks now? So that market is kind of turned into a bear market, despite the fact that OPEC Plus is still talking about these cuts, right?
That's amazing. Normally you would think that when you pull production off of a market, you'd see prices go up, but we just can't seem to get it in that crude oil market. Now, I wonder if we're setting ourselves up for a pretty good push at some point, but we get down into the $70 level. The market seems to find some support. Right now we're trading in that 73 region. I would expect that we'd start to see some strength come in. But yeah, OPEC is looking at long-term cuts. That should help stabilize this market in the long term.
Well, and at that point, do we get some buying for the Strategic Petroleum Reserve or not?
Boy, if there's ever a time to buy it, it would be now, because you're buying it much cheaper than what we were letting it out at. So yeah, I would think that right now we should start to see some government demand that should help support that price.
Yeah. Well, we'll watch that, because I've read some stories about maybe us not filling the reserve right away. So we'll see what happens. Thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.